Hi, Richard here on Thursday the 23rd of September. A couple of charts up, and they are the Dow Jones on the left and the S&P 500 on the right. Expanding this one first is that I wanted to take you back to show you again the August 2009 beginning of this trend line, which was tested once, twice during the flash crash, and then broken, of course, during the flash crash, which came down to the orange line, which was the which stems all the way from October 2007, and then support became resistance, one, two, and a third time here. The key question remains as to whether or not there is enough bullish activity out there to push this up through. And I wanted to look at the Dow Jones in order to, the S&P 500 to assess that. Again, there's the long-term trend line stretching back. We are really interested in on a couple of points of resistance here, and these are all about trading and what makes probabilities of success. And the first one is that if we take the April to July or late June low and measure the Fibonacci retracement, we can see that we're smack on the 61.8% retracement. This also intersects directly with the longer term trend line that we talked about before. And thirdly, there is one other example of why we may possibly see some downside action, and I'll measure those targets in a second. But the first is this 333, which is, you'll have to look through these letters, but we've effectively got an ABC correction which found resistance and a key reversal, pushed down in an ABC and back up in this ending diagonal, which is part of the second zigzag under the Elliott guidelines, and then thirdly an ABC and back up on the C leg, on an ABC leg in 5 waves through here to test the trend line and the extension. So we don't know obviously whether or not this is likely to be the continuation of the bear market, but certainly there's some bullish indicators out there. So in the event that we want to trade it either way, what's the likely opportunity? Well, we're looking short from here because we've got this key reversal. This day is the first time in this leg that we've closed, the second time in this leg that we've closed beneath the previous day's low. You can see this spike down here is another one. But if this trades down, then we want to be on it down towards the 1,103 mark, and then we'd be looking for support in the event that we got bullish undertones that took us further north and through this trend line. So that is specifically an opportunity, but either way it would be a stop and reverse trade, short to here and stop and reverse to go long, because technically these are great inflection points, great areas of probability, and where we get some very significant volatility as it comes out of the starting blocks. Moving on to the Australian market, you can see a similar pattern exists, and I'll put on that Fibonacci high down to the flash crash low. There it is, intersecting directly in line with the US markets, and we've got these doji reversal days happening here, pushing down to the moving average. The key question obviously remains, well, in the event that it does break through, where's it likely to go to? So we can measure that from this low to the high here. That's the low on this trend line to the high that we made on the 16th of September, and we'd be looking for a target, and that's what those red lines are. 4,528, 4,474 would be two targets, the 38.2 and 50% retracement of this move up, retrace down to here. The Australian dollar, well, it has made the upper trend line. I mean, this has been just an incredibly powerful straight shot. 5 clear waves down, this wave in here, so we go up for 1, down for 2, an extension on 3, 4, and up for 5. The possibility is that it could still continue up and throw over this line. That's always a good indication of the culmination of an end of a trend. But 96.40 to 96.50, or let's call it 96 cents to 96.50 is the target in there before we'd hope to see some retracement. Certainly you can see the movement down here on the relative strength index. We're in overbought territory. I can scroll back. You have to go back a long way to October last year to see an overbought situation before, and prior to that, June that year. It's worth going to the weekly chart and having a quick look just to see where we are in the broader context. You can see here the beginning of the GFC let go. There was the call for parity. It went to 98.57 and then a let go and a vertical drop straight off, and we have tracked very smartly all the way back up to that, and given that Australian dollar is a commodity currency, that's the reason for it. So whether it will test this high, well, one would have to expect that it would in the event that we get further bullish activity. But again, on the daily, there's the target 96.43, and then we'll have to reassess it from that point. Here's a weekly chart of the gold spot market, and you can see the support that we got off here. The anticipation was this was coming up for a one wave, down for one, up for two, and then break this line. Well, clearly that has not happened. It's really on the strength of the US dollar index, which is tanked and has pushed down heavily, and this is why gold has been moving up. So as people parking the dollars into gold and bonds. So 12.98 was the target. This is a Fibonacci extension actually on the daily chart, and I'll maybe go to that as it. You can see the 12.91 to 13.03 mark there. Well, it's actually smack on it at the moment. The question remains whether or not we get further support and an extension. Well, let's try and measure that. If we take that line up to there, what would that extension look like? Well, we're talking about $1,345. 1,305. I think that this reassessed extension really was based on the 1305 is because we were forecasting this 1303 before we had all of this data in here. So the new data allows us to give a possible target of 1305. If it bursts through that, breaks through that, then we'd be looking for $1,345 as the next target. Well, that's it from today's update. For more information, go to themarketforecaster.com.au, and you can see all of the detail on the charts there, including stocks on both the indices as well as gold stocks.